In today's rising interest rate climate, technology counters seems to have lost their luster. It was not too long ago that we were still trumpeting how sexy loss-making tech counters were, with the king of championing growth stocks, or should I say the queen, being none other than the famous Catherine Woods herself, highlighting that the future belongs to these game-changing stocks. Well, she might still be proven right in time, but for now in 2022, the king of value, Mr. Warren Buffett himself, still has the last laugh. While value stocks seems to be taking center stage at present, there's this particular category of growth or technology stocks that has caught my eye. Yes, it has a sexy story behind it, but I believe that beyond its growth story, the fundamentals remain sound, and this industry also has the track record to back it up. In this video, I will be highlighting why you should be positioning yourself in this technology ETF, one which has outperformed both its peers as well as the broader market on a year-to-date basis as well as over the past 5 years. Hello everyone, welcome once again to the NOF YouTube channel with me, Royston, dishing out today's latest and hottest financial tidbits. Before we proceed, once again, I will appreciate it if you can pass your mouse over to the like and subscribe button and give them a click, yeah? Alrighty, so today's video is on a technology ETF. This particular sector hasn't been doing well in 2022, not that surprising as investors shifted their focus from unprofitable stocks often found in this sector to the safety net of value counters, which are viewed as the wiser option in today's climate. However, I used the Stock Rover screener and found a gem amid all the tech ETFs that have been battered. This ETF is none other than the First Trust Nasdaq Cybersecurity ETF, or ticker CIBR. What's so special about this ETF, you may ask? Well, a very valid question, and the reason why it caught my attention is because this ETF is only a handful of tech-related ETFs that has actually outperformed the S&P 500 on a year-to-date basis in 2022, and that is quite a fit itself considering how hated technology stocks are this year. I'm not looking at it with such a narrow time frame and concluding that this ETF is the shit that you need to aim into. I'm not asking you to aim into anything. Guys, let us be civilized over here and not act like monkeys, yeah? So again, this is not financial advice to buy into this counter, but a friendly suggestion for you to do a little bit more research into this ETF. Now, beyond a year-to-date horizon, this is also one ETF that has outperformed the S&P 500 consistently on a 1 to 5 years time frame. That is what I like to see. Consistency is the name of the game. At this juncture, you might be wondering, well, there are plenty of tech-related ETFs that have also done well over a 1 to 10 years time horizon. True, but many of those ETFs have also witnessed significant underperformance this year. I want to find a tech ETF that can do well even when this particular sector is unloved like it is right now. Now, let's dig a little deeper into CIBR's industry or niche. Getting into the cybersecurity space seems to make a lot of sense right now, where everything is going digital and there also comes the risk of online fraud and hacking. This is even more so in the current context of the Russian-Ukraine war, where the battle against cybercrimes is heating up and the services of these cybersecurity companies are ever more important. The latest cybercrimes hitting the headlines can also be found in the cryptocurrency space, where Axie Infinity, the uber-popular play-to-earn crypto game, found itself victim to hackers when more than 600 million was stolen from its treasury pool just a while back. Guys, the transition from offline to online, like what Thanos says his is inevitable. And that is why the fundamentals behind cybersecurity companies aren't just a fad, but one which will likely be more attention-grabbing, and corporations know full well that this is one aspect that they cannot afford to ignore. Alright, coming back to CIBR, let's take a quick peek at what this cybersecurity ETF consists of. Its largest holdings are in Palo Alto Networks, a pretty blue-chip company in the cybersecurity space that, unlike many of its tech peers, is trading at an all-time high level at present. Now, before aping into the CIBR ETF, and again, I'm not suggesting you to do that, ask yourself first and foremost if you do believe in the industry fundamentals. If you do, like I am, then you might want to consider engaging a dollar cost average approach for this. This can be easily done using the Cyph robo-advisor platform, where you can select their custom platform, then select the technology sector to have the CIBR ETF option made available to you. This is one low-cost and disciplined way to get involved in the cybersecurity space. For transparency purposes, do note that selecting this option means you are subjected to annual recurring fees of around 1.2%, being the Cyph platform fee that is incurred in addition to the expense ratio of this ETF. A cheaper alternative would be to use its Cyph trade platform, where there are no platform fees incurred for this route. For traders looking at this counter, now is also an interesting time because momentum is building up for this ETF, as can be seen from the Traders GPS platform, an easy to use platform to find stocks with increasing momentum in their early stages. For those who are interested in the Stock Rover platform, which I use to uncover this gem, or the Cyph platform, which you can use to participate cheaply in CIBR on a dollar cost average basis, or the Traders GPS platform to find trending stocks, I'll leave their links in the description below where you can read up more on them. With that being said, I hope that you'll find today's video interesting, and if so, please remember to share it and do hit the like button and subscribe to the NUF YouTube channel if you wish to be informed of more such financial tidbits. With that, this is Royston signing out.